What up, YouTube? It's your boy Charles Enoch. You already know we back with another Invest in Myself episode. Where the intro at? So today we'll be talking about how to use a credit card to pay off a home improvement loan. But before we get started, make sure hit that like and subscribe button for me. My goal is to get to 10,000 subscribers by the end of this year. So I appreciate you guys for taking the time to do so. So I want to talk to you guys about how to incorporate velocity banking while having a home improvement loan. So I've received quite a few home improvement loans on my rental properties. The majority of these loans will have a 12-month 0% interest option. Then after the 12 months, the interest rate pretty much skyrockets. So what I pretty much do is get the 0% interest loan and save up as much money as I can within those 12 months. And then the money that I saved up, I will apply it all towards the loan. After that, I will use my credit card to pay the remainder balance of the loan. Then I will use the velocity banking method to pay my credit card off. So basically, I will use my income to stuff it into my credit card and then use my credit card to pay my expenses. Now the leftover cash flow will stay on your credit card until it's paid off. Now I know this may sound complicated, but you already know I got a whiteboard with a scenario set up and we'll break this down. Let's go. All right, so on the whiteboard, so let's get to the scenario here. So we have an individual that has a home improvement loan here. So their income is going to be $4,000. Their expenses are going to be $3,500 and their cash flow is going to be $500 per month. Now their home improvement loan is going to be $10,000, 0% interest for 12 months, no monthly payment until month 13. So they're going to have a credit card of $8,000. This credit card is going to have a no balance transfer fee. Now, there are credit cards out there that do have a no balance transfer fee. They're usually presented by credit unions. So if you're trying to look for a credit card like that, check your local credit union. I use BECU and they usually have those type of promotions for them. All right, so we're on the other side of the board. So I'm gonna break this scenario down in 11 steps here. So let's take a look at step one. We got the home improvement loan of 0% interest, 12 months, and for $10,000 here. So step two, there's no minimum payment on the loan, right? Step three, once project is completed, loan starts the next month. So you got 12 months and then month 13 is when they say that you have to pay the loan, right? So what this means is if you have a cash flow of $500, you should be able to save that $500 for 13 months, meaning that you'll have $6,500 that you can apply towards the loan here. So for month 12, I would use my balance transfer on my credit card for $3,500. And again, I have BECU. They don't have a balance transfer fee. So the $3,500, why we're putting that on there is because we'll have $6,500 saved up already that we can apply towards the loan. The balance transfer would pay the rest of the loan off here. So step six, once you use that balance transfer fee, if you use it in month 12, this is going to push back when you need to pay that $3,500. So it would be on month 13. So step seven, month 13, we're going to apply that $6,500 on the loan. That should pay the loan off because remember, in month 12, we used $3,500 to apply towards the loan for the balance transfer. Now, step eight, we're going to use our income. Remember, we have $4,000. We're going to use $3,500 to pay the card off in full. So once we pay the card off in full, we're avoiding any interest here. So step number 9, we'll have $500 left over. Remember, our income is $4,000. So we'll have $500 left over. We're going to use that to pay for our expenses along with our credit card to pay for the rest of our expenses, right? Remember, when we pay that credit card off in full, we avoid any interest here. and then we can use that money on the credit card to pay our expenses off, right? So step 10. So the cash flow on the card should remain on your card, that $500, right? So if we have $3,500, we're going to have to repeat steps 8 through 11 for 6 months. And that will pretty much pay off that $3,500 without paying any interest. Because remember, we're putting the money onto our credit card, paying it off in full, avoiding any interest, using our leftover cash to pay our expenses, and then we'll use the credit card to repay the remainder, right? So again, we're just repeating that step 6 times. We paid off the home improvement loan, 0% interest, and we paid off our credit card with 0 interest on it as well. So hopefully this was beneficial. Leave a comment down below, like, subscribe, and like always, you guys have a good day. Peace out.